Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar is slightly weaker after the Australian Bureau of Statistics published the October month employment statistics, which matched nearly a 5-decade low at 3.4%, which with 3.6 expected forecast in October. With 32,200 jobs found, plus 15,000 forecasts missed, the market is now slightly weaker, and as we can see, heading now towards 67.10. But I do feel towards 66.65 will draw the bulls back into the market, and therefore could see another rebound like previously witnessed just recently, and therefore looking back towards that top side around 68 cents. Euro market is a little bit weaker into the European session as geopolitical risks ease after Poland and NATO said on Wednesday that Tuesday's explosion was probably from a stray missile from the Ukraine air defense and not an intentional Russian strike. That has eased markets as well as safe haven demand. But at present, I'm not turning bearish because the ADX is still relatively bullish for the euro, so therefore we should find support towards the region of 103.40, and if so, expect to see a rebound and look back towards that objective of 105. The dollar yen I still anticipate to be weaker as the technicals are somewhat lackluster and therefore could see the move holding to the objective, which still is at 136.40.60, and no doubt we could see a good return of demand and maybe even a correction from there, so do be on your guard. Sterling a little bit weaker into the Thursday session, but nevertheless I feel the market will likely find support around the region of 117.90. By some surprise, the Office for National Statistics in the UK showed the inflation had jumped higher than expected of 11.1 last month, which was the highest rate since October 1981. So we're seeing that some of these inflation numbers are still around that 10, 11-year highs. Still, the market will probably be a little bit weaker into the European session as all eyes look towards the UK announcement to its new budget. But I feel from 117.90 could bounce and still look towards 120. Having two attempts at the top side of 1,784 to 88, the market is now weaker and now looking towards the region of 1,756 to 58. If we fail to get a bullish response from there, then most of these gains will be returned, and I feel we could see a further fall towards 1,746 to 48 and reassess. Wrapping up with oil, the market is also pressuring the downside as COVID risks in China increase. New sources reported that China has over 20,000 new cases daily this week, its highest rise in roughly 7 months, and therefore has put a little bit of a dent when it comes to oil demand. Let's keep an eye on this support level of 83.70 because if breached, could see further risk down towards $81 a barrel. Well, that wraps it for today. Thank you very much for joining me, and as always, look after the intro report. I hope you enjoy the rest of the